All right, let's dive right into Bausch Health's latest earnings report for Q3 2025. It's a pretty impressive story, and we're going to break down all the key financial numbers, focusing specifically on what the CFO had to say. So what's driving all this success? Let's find out.
Wow, okay. This quote from the CFO, JJ Shalanen, really says it all, doesn't it? 10 straight quarters of growth. I mean, think about that for a second. That's 2.5 years of just solid, consistent, positive results. It's a huge deal. So, you gotta ask, how are they pulling this off?
Okay, let's get into the big picture numbers to see what this performance really looks like.
So first up, revenue. For their core business, and remember, this is without the Bausch plus Lomb segment, we're looking at a solid 7% jump year over year. That's a really strong number right out of the gate.
But check this out. This is where it gets really interesting. So the official number for their profitability growth, their adjusted EBITDA, is 7%. But, and this is a big but, that number is hiding something. It includes a big one-time R&D charge. If you pull that out to see how the business is actually running day to day, their profitability shot up by an incredible 18%. It just goes to show you, the underlying business is even stronger than the headline numbers let on. So here's a quick look at the key numbers all in one place. You've got revenue up 7%, and that profitability measure, adjusted EBITDA, also up 7%. Now, you might see that adjusted operating cash flow is only up 1% and think, what's up with that? But the CFO explained it away pretty clearly. It's just about the timing of some payments, the normal ebb and flow of cash in and out of the business. It's not a red flag about their performance. So yeah, all in all, a really solid quarter.
Okay, so the company did great, but where did that growth actually come from? Let's peel back the onion a bit and see which parts of the business are really firing on all cylinders.
And here they are, the two absolute superstars of the quarter. You've got Salix, their gut health business, with an awesome 12% growth. And then there's Solta Medical, their aesthetics division, which just went nuclear with 25% growth. I mean, it's pretty clear these two were the heavy lifters this quarter, no doubt about it. Let's zoom in on Salix for a minute. Their main product, Ziffasan, had a monster quarter. We're talking a 16% jump in revenue compared to last year. And get this drug has been around for 15 years. For a product that matured to be growing at that kind of pace, that is seriously impressive.
So what's the secret sauce behind that 16% jump? Well, it was a few things. First, just more people are using it. Prescription volume was up 9%. They also got a nice little boost from a one-time pricing thing, but here's the kicker, and this is what really matters for the future. New patient prescriptions were up 11%. That tells you they're still bringing new people in the door, which is fantastic.
Okay, let's switch gears to that other powerhouse, Solta. And this chart right here tells a huge part of their story. Look at that. A whopping 80% of all their revenue comes from the Asia-Pacific region. That's a lot. And when you dig into that Asia-Pacific number, it's a bit of a mixed bag, but still really, really good. South Korea just went off the charts, nearly doubling, with 96% growth. China was a little quieter, up just 3%. Seems like consumers there are being a bit more careful with their money. But what's really encouraging is that they're also seeing strong double-digit growth in the US, Europe, and Canada. So the investments they're making outside of Asia are definitely starting to pay off.
All right, so Salix and Solta are crushing it. But to get the whole story, we need to look at the other side of the coin.
But the question is, was everything growing? Let's take a look.
And the answer is no. Their international business was actually down 2%, and the diversified segment dropped by 4%. It's just a good reminder that even when the headlines are great, a big company like this always has a lot of moving parts.
So why the dip in these areas? Well, it turns out the reasons are mostly temporary, which is good news. Basically, they're up against what you'd call a tough comp. Last year, they got a big, unusual boost because their competitors ran out of some drugs. So, of course, this year looks a little weaker in comparison. When you account for that one-off situation, it's really not that concerning.
So after a performance like this, what do? You raise your expectations for the rest of the year. And that's exactly what they did, which is a huge signal of confidence to the market.
Let's look at the new numbers. They've bumped up their forecast across the board. They're expecting more revenue, more profit. I mean, they're clearly feeling good about how the year is going to end.
But the really big news here is the cash flow forecast. They've raised their target for the year by a massive $150 million. That is a huge jump. It tells you that this company is just a machine when it comes to generating cash, which is exactly what you want to see for long-term financial health.
So, with things looking so good, what's the game plan moving forward? What are their priorities?
Well, the CFO made it really clear that they're sticking to the plan. No big surprises here. It's a simple three-step approach. 1. Make their best businesses even more valuable. 2. Figure out how to get that value into the hands of shareholders. And 3. Keep chipping away at their debt and making their finances stronger. It's a solid, straightforward strategy.
And this final quote from the CFO really wraps it all up nicely. They're happy with the progress they've made, and they're confident they're going to finish 2025 on a high note. The new guidance proves it.
So what's the big takeaway here? Well, Bausch Health has two absolute powerhouses in Salix and Solta, a clear strategy, and a really positive outlook. The big question, the thing we'll all be watching for, is this. Can they get that same magic working in their other business units? Can they achieve that really balanced growth across the whole company? That's the story to keep an eye on.